Hello, you're welcome to FinInvest Niger. My name is Prince Will Tong. I'm a certified securities and investment specialist, and I've spent about 20 years investing in the stock market. In this particular video, I want to highlight the benefits of investing in the stock market, the benefits, the advantages, the the pros of investing in the stock market. In actual sense, we have different kinds of asset classes. You have stocks, that's shares or equities. You have mutual funds. You have index funds. You have bonds. You have private equity funds. You have venture capital funds, as well as exchange traded funds, ETFs, and we equally have commodities. So with regards to all these different asset classes in mind, I want to specifically highlight stocks as an asset class, and the benefits, the advantages of investing, the merits of investing in the stock market, or the advantages of buying shares in the market. So when we talk about these particular pros, we want to highlight number one, long-term wealth creation, through consistent investing. When we talk about investing in stocks, actually, it isn't a get-rich-quick scheme. It takes time, it takes patience to be able to accumulate the kind of wealth that you would like to accumulate in the market. And so it involves consistent investing. You may invest monthly, you may invest quarterly, it could be biannually, it could be annually, and as the case may be. All the same, it requires consistency. As you keep on investing consistently, in the coming years, maybe 5 years or 10 or 20 or 30 years, you discover that you are, a very wealthy man. You could afford to retire, and then depend solely on your investments. All right. And so the issue here is that it involves consistent investing. You keep on investing regularly, you keep on putting in money in the market regularly, and before you understand what is going on, you've been able to meet your financial targets or financial goals. Number two is potential for high returns compared to savings and fixed income assets. When we talk about the returns in the market could be risky, quite all right, but the returns is somewhat encouraging compared to you putting money in the bank and receiving less than 5%, as interest. And other fixed income, assets like bonds, they are there essentially for wealth preservation and not for wealth creation, because usually the returns on bonds just, usually it's some lower double digit returns. It's not comparable to what you can get in the market. You could almost like double your money in a year or so in the market, but you can't double your money, in bonds in the next 5 years. It takes time to be able to accumulate wealth in bonds. And so there's that particular potential for a higher returns, as a stock investor. You could get higher returns, higher investment as an investor in stocks. Number three is capital appreciation. And as companies grow and expand, generally companies don't stay stagnant. Companies are organic beings. They grow just like any other organism. And as this company grew, when they grow in turnover, grow in sales, grow in grow in profits, and in earning per shares, grow in top and bottom line, eventually the stock price will grow alongside the growth in company fundamentals. And so you get to benefit from this particular growth the company gives you as an investor. You see, and so as the company is growing, your wealth is equally growing alongside the company growth trajectory. And so the stock market gives an opportunity to invest in companies that have that particular tendency to grow tremendously or to expand tremendously. Number four is regular income from dividend paying stocks. I made a video about dividend investing strategy. You could see that video in my channel, if you so wish. Generally, as an investor, you have that particular long time orientation. But while you invest and you're waiting for your money to appreciate, you tend to get paid through dividends regularly. If you invest in dividend paying stocks, you discover that in fact the dividend alone over the course of 3, 4 to 5 years will even recoup your overall investment in the company, depending on how high the dividend yield is. And so you could have that regular income coming in to support your lifestyle and to help you take care of your emergency financial needs here and there. Unlike real estate, where unlike land banking, where you have the asset tied down there, you can't really generate income from it. But when you come to stocks gives you regular dividends that can support and sustain you while you equally enjoy capital appreciation. And we come to the next point. There is protection against inflation over time. When we talk about an investment generating cash or yielding returns, you have to consider it in the light of prevailing inflation figure. If the returns from your investments in any asset class does not outpace inflation, then you are running at a loss. But if you come to the stock market, the kind of returns the market generates will be able to cater for prevailing inflation. That's one aspect that is so important about stock investing. Stock return generally tends to beat inflation year in, year out, compared to returns in other asset classes like real estate and other ones I earlier mentioned. And not only that, the next point there is ownership in real business, in real businesses, and as well as even global company. You may choose to invest globally. You could buy shares in the US market from right here in Nigeria. So that opportunity for you to invest globally is there. Not only that, you have the means of investing in real companies. Imagine investing in companies like Dangote Cement, Guarantee Trust Bank, Zenith Bank, Lafarge Wabco, Unilever, and other top blue chips companies. So you get to invest in real companies that provides or produce returns, outstanding returns over the course, of a given, time periods. So you now become, an investor and you are a business owner. Imagine Dangote owning a business and you are a partner kind of, or a shareholder or a part owner of Dangote's business. This particular opportunity only comes through investing in the stock market. Please support me in this channel. I want to reach out to 1 million Nigerians home and abroad in the diaspora with this message of investing, and I need your support. All right, when you subscribe to this particular channel, you are encouraging me and you are making this video to go wider, to go kind of viral, and many people will get to see it. They will come to benefit from the inherent wealth creation opportunities in the stock markets. So I crave your indulgence in these regards. The other point is there's that particular liquidity. In other words, you can very easily buy and you can equally easily sell your shares. Compared to land banking, you want to sell your land today, it might take you weeks, if not months, to be able to find a buyer that could buy at a reasonable price. That's one, critical disadvantage of investing, in real estate. But when it comes to the stock market, the liquidity is there. You can sell your stocks within minutes. Just key in the number of shares you want to sell in a given company, and then you click your sell button. If you understand, instantaneously, the sell, mandate is executed. You receive your trade alert within seconds, and also there will be a confirmation, message. They call it contract note in your email, indicating that yes, your mandate has been executed. And that that contract note is a symbol, a receipt of ownership. As the case may be, if you are buying, if you are selling, it equally tells you that yes, you've successfully disposed of your holding or your shares in the company you've sold. So that liquidity is always there. You don't need to go around, scouting for buyer. No, simply go into your investment apps or your terminal and you key in your sales order, as the case may be, and before you understand, your order is executed almost instantaneously. So the liquidity is always a factor when it comes to investing in the stock market. And we have the next one is diversification across sectors, industries, and countries. You see, when it comes to investing, you are expected not to put your eggs in the same basket, in one basket. You spread your eggs around, you spread your investment around, you diversify so as to be able to, minimize the inherent risk in investing. And so you could diversify across countries. You can invest outside Nigeria. You can invest in other countries outside your home country. Not only you could invest across sectors in the economy. You could invest across industries. You can buy shares in the banking sector, in the building material sector, in the oil and gas sector, in the insurance sector, and even in the consumer goods sector. So you could invest across different sectors of the economy, and by so doing, you are fully diversified, and your risk essentially is minimized as a result of your diversification processes. Then you talk about the power of compounding by reinvesting dividends. A very, very important benefit of investing in stocks is that particular power to compound. Your investment will keep on compounding. As you receive dividends, you may choose to reinvest through a dividend reinvestment plan. All right, that particular plan is designed to help you reinvest your dividends in the market. And as you reinvest your dividends, your overall capital keep on expanding, keep on compounding. Albert Einstein said that compound interest is the eighth wonder of the world. And so you get this particular process of compounding in the stock market. Reinvest your dividends plus your capital gains, and everything keep on expanding. And in a matter of years, the result will actually shock you. And then lastly, number 10 is flexible investment options for depending on your budget, for your budget, and of course your investment goals. The market is quite flexible. You could invest with as little as 5,000 naira, 10,000 naira and above. So it's flexible. So everybody could, in theory, be expected to do what, to participate in the market, because there's no class demarcation or class stratification when it comes to investing. With as little as 5,000 naira, you can invest. All right. And so your budget is immaterial. And not only that, it equally accommodates your investment goals. You may want to, invest today and sell in 6 months. Okay. You may want to invest today and sell in maybe a year or 18 months or 24 months, as the case may be. So the market can accommodate your overall investment goal. All right. That's why it's very, very important you make sure that you invest in the stock market. Before I round up this video, I will not forget an interesting story I would like to share with us. In 2010, actually, or the particular company was selling for about 7 naira, and that was Preschool. The Preschool was selling for around 7 naira in 2010. As I'm telling you now, Preschool is selling for over 1,000 naira. If you look at the returns there, it's over 5,000%. All right. So it then means that if you had invested 1 million naira in Preschool in 2010, as I'm speaking now, your 1 million naira will yield about 60 million naira. 1 million naira to 60 million naira. That's the kind of returns you can get even in stocks. All right. And so some stocks even double within 6 months, some will double within a year, some will even double and triple within 18 months and 24 months. So actually, the kind of returns in the market will help you beat inflation and also help you to achieve your financial goals without much stress. Just invest, all right, and then the company will take care of everything. As the company makes profit and expands, so will your wealth expand alongside the company's progress. Please keep on watching my other videos, and then you'll get to understand what I'm telling you about better.